Stocks versus crypto. The biggest investing debate of our time. Should you invest in traditional stocks for long-term stability or go all in on crypto for potential life-changing returns? We're breaking it all down today, comparing them in returns, volatility, accessibility, regulation, and risk management. And by the end of this video, you will know which one suits your financial goals best. But before we dive in, let me ask you, are you team stocks or team crypto? Drop a comment below and let's see which one wins. If this is your first time here, welcome. My name is Salah and I make videos about investing, making money and building wealth. So if you're interested in that, hit the subscribe button so you don't miss future videos. And now, let's get into it. Let's start with historical returns. Over the past 100 years, the stock market, especially the S&P 500, has returned an average of 8 to 10% per year. That means a $10,000 investment in 1980 would be worth over $900,000 today. Not bad, right? But let's compare that to tech stocks, which is the closest thing to crypto in terms of growth potential. Amazon and Tesla have outperformed the stock market average, with Amazon returning over 200,000% since its IPO in 1997. That's insane growth, but still nowhere near Bitcoin's early gains. But now, let's talk about crypto. In 2010, Bitcoin was just worth $0.01. In 2021, it hit $69,000. That's a 6.9 million% increase. This is where things get insane, since no stock in history has done that. And Ethereum, in 2015, it launched at 75 cents per ETH. By 2021, it hit over $4,800 per ETH. That's more than a 640,000% gain in just 6 years. But here's the catch. Stocks are slow and steady, while crypto is fast and unpredictable, which will lead us to our next point. Volatility is the roller coaster of investing. And between stocks and crypto, there is a huge difference. Take the stock market, for example. Yes, it crashes sometimes, like in 2008, when the S&P 500 lost over 50% of its value. But guess what? It recovered and went on to hit the new highs. Especially the blue chip stocks and index funds tend to recover since they are backed by real businesses. And it's not just in 2008. In March 2020, when COVID hit, the market crashed by over 34% in 1 month. But instead of panicking, smart investors like Warren Buffett bought more stocks at a discount. And within a year, the market recovered and hit record highs. Now compare that to crypto. In 2022, Bitcoin fell from $69,000 to $16,000, losing 75% of its value in a year. That's like if Apple stock went from $200 to $50 in 1 year. But unlike the stock market, which has government regulations and historical stability, crypto is still an emerging asset class. There is no guarantee a cryptocurrency will recover. But it goes both ways. In 2020, Bitcoin skyrocketed by 500% in a single year. If you had invested $1,000, you'd have $5,000. Meanwhile, stocks take years to generate the same returns. So what's the takeaway? Stocks are stable and predictable, while crypto is high risk, high reward. It all depends on your risk tolerance. Next up, let's talk accessibility. Stocks have barriers to entry. Depending on your country, you might need a broker, a minimum investment, or even special approval to trade. But with crypto, anyone, anywhere can buy Bitcoin. You don't need permission from a bank or government. All you need is an internet connection. Plus, the stock market is only open Monday to Friday from 9:30 a.m. to 4 p.m. But crypto, it never sleeps. You can trade Bitcoin at 3 a.m. on a Sunday if you want. But this open system has a major downside. It makes crypto a prime target for scams and fraud, because anyone can launch a cryptocurrency, and there's little stopping for bad actors from creating pump and dump schemes and fake tokens. Unlike the stock market, where companies have to follow strict financial regulations, in crypto, a project can raise millions from investors and vanish overnight. We've seen it happen again and again. And that leads us to our next topic, regulations. The biggest difference between stocks and crypto is regulation. Stocks are highly regulated. The SEC and other financial authorities monitor the market to prevent fraud, where the companies must report earnings, follow rules, and face penalties if they break them. But crypto, it's like the Wild West. Anyone can create a cryptocurrency overnight and pump it with fake hype. Just look at FTX, the $32 billion crypto exchange that collapsed overnight, losing people's life savings. That's why many governments are pushing for more crypto regulations. And honestly, if crypto gets more regulation, it might become safer for investors. So what's the best investment strategy? Here's a simple breakdown depending on your risk tolerance. If you want safety and long-term growth, invest 70 to 90% in stocks and only 10 to 30% in crypto. If you're willing to take risks, consider 50 to 60% stocks, 20 to 30% crypto, and 10 to 20% cash or other assets. If you're all about high risk, high reward, you might go 50% crypto, 40% stocks, and 10% other investments. The key here is diversification. You don't want 100% in stocks since growth might be slow, and you don't want 100% in crypto since the risk is huge. But here's my personal rule. Never put more money in crypto than you're willing to lose, because while it can make millionaires, it can also wipe you out overnight. Alright, so which one wins? Stocks or crypto? For long-term steady growth, stocks win. For high risk, high reward potential, crypto wins. But honestly, the best strategy is both. Smart investors use stocks for stability and crypto for growth. If you play it right, you don't have to choose. You can build wealth by investing in both. But remember, no investment is guaranteed. Always do your own research. Be patient and think long term. Since this video has come to an end, if you found it helpful, hit that like button and subscribe for more investing content. And let me know in the comments, are you investing more in stocks or crypto this year?